Good morning, everybody. Awesome. Hi, welcome to our next segment, which is presented by Desmond Leong, founder and the CEO of Everest Quadrant Group. Right. This topic is about combining sector rotation with advanced technical analysis. So, Desmond, the time is yours.
Okay, thank you. Hey guys, thanks for tuning in, right? For staying all the way until today's session, right? So I do want to encourage you. I literally have another screen that's open over here, monitoring questions that come through. So if you have questions, just try to shoot them through as soon as possible. I'll do my best to answer them live on the spot, right? Because today's this session, I'll be showing you I think what Ethan mentioned, combining sector rotation with advanced technical analysis. Right. Anyway, without further ado, let us begin. So just a really quick point about company Everest Quadrant Group, award-winning research firm, and we are the finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research. We a lot of you guys might have seen us doing webinars for various different brokers, right? So usually we provide research and forecasts to brokers, banks, treasury departments. Right, we're on webinars a lot, so I know a couple of you guys are tuning in, so thanks for coming to support. Right. Anyway, yeah, we are really good in technical analysis. I cannot say the same for our fundamental analysis, but yeah, we're really good at technical analysis. Right. So if you want to take the chance to to shoot questions over, especially regarding TA, now will be the time. Right. So anyway, right, without further ado, right, these are the main things that I kind of want to touch on today. Okay. First and foremost, what is the relative rotation graph? You see it being used a lot. You see it being used a lot in usually on Bloomberg, right? SGX, those guys. I think the Geoff Howie uses it a lot over there, right? But today I just want to kind of let you know a little bit more about how what exactly it is, and give you a different spin on it, right? A different spin on it, on how you can really use it from a trader's point of view. From a retail trader point of view, right? Kind of keeping it simple and practical, right? I'll be showing you my approach. I got a 3-step approach to really fine-tuning your picks, right? From there, right, I'll just show you how there are 2 main quadrants we're looking at, right? It's not so much the improving quadrant, right? But it's more of the lagging quadrant, right? Which are the correct quadrants to look at when you want to go long? That means you want to buy. And which are the quadrants you can look at, when you want to go short, sell, right? Then I'll be doing a live presentation on a technical analysis right on the spot for you, right? I'll show you how, we're cherry picking a couple of stocks just to do analysis on it, all right? Now let's begin. So what is the relative rotation graph? I'm gonna stick to the main points here. Okay, I'm gonna stick to the main points here. Of course, the calculations are based off relative strengths, but the important thing which you need to take note of, I'm gonna see if I can use my highlighter, my pen here. The important thing that you take note of is that there are these few quadrants. One is the improving quadrant, one is the leading quadrant, one is the weakening quadrant, and one is the lagging quadrant, right? So a stock, a counter index or whatever it is, it kind of makes its way around, sometimes not as ideally, ideally we want it as smoothly as, going around like that. But sometimes, it goes up, but out, it goes up and down. Sometimes it goes very far off, it behaves in very strange ways. So that'll be showing you an example of that. It does not necessarily mean that you always go in this direction. Sometimes it might reverse a bit, right? But generally, move in this direction. So based on these 4 quadrants, right, the lagging, the improving, the leading, and the weakening, we can more or less know where are our opportunities when it comes to looking to short, and where do we go in, which sectors we could actually go in on, to get in early on some really juicy, good trades, right? So let's take a quick look at this, right? So this is a very, very recent RRG that I've done. I put it together in the form of a GIF, right? So you can see the way that it was moving around. You can see these are all different sectors. This is actually based on the S&P, right? So in the middle is the S&P, right? So all the little subsectors, right? These little subsectors, they're moving around. Yeah. So those are the subsectors that revolve around the center of the chart. So you notice that they usually move in a clockwise direction, right? They usually move in a clockwise direction. So you can, one common question I get asked is, this RRG, how do you get it, right? Is do I need to pay for it? Do I need to, is it only available on Bloomberg? Well, the good news is that I actually found a few places where we can get the RRG for free. Okay, so of course, actionable points that we retail traders can use, right? And I do want to kind of show you really quickly, right? You just search free relative rotation graph, on Google, and you see this thing called RRG online, right? You click on it, you can just register. Now it's free at least, right? But once you register and you get in there, this is what you will see, right? There are a few major indices, countries they can really look at there, right? Even got, for those of you guys, there's currency pairs, there's Amsterdam, ASX, Australia, right? But if you're looking at the US stock market, right? So you want to look at the S&P 500 sector index, right? So the moment you select it, right? The moment you select it, what you notice is when you click, you can choose like 1 day or 1 week. Usually I go for, it depends again, it depends on your trading horizon, right? So if you're a longer term trader, right, maybe, you're holding like, maybe in this investing note session, right, we're looking for stuff that we can hold on, hopefully until the end of the year, right, even beyond. So we look at stuff like the 1 week time frame, right? So it gives us a much bigger forecast, right? If you're looking for something like, okay, where can I hold for next like few weeks and stuff, you can use the 1 day, time frame. You'll notice that these are all the different index within this S&P sector indices, right? So from here, you can more or less guess which ones are going to end up in which lagging, improving, leading, and weakening sector. Okay, so let's take a quick look. So what I like to do, right, is there's this little bar here, right, that kind of just shows you, you can just play around and see, this is how it goes back and forth, right? But once it comes to the end, right, so the important thing that I want to highlight here is that most people would think that you want to look at the improving one, right? Technically, yeah, you can look at the improving sector, but what personally I like to look at is I like to look at the lagging sector, because lagging, it kind of says that the next sector that you will go to is the improving. So if you want to get in at a good price, right, and get in at a good price, right, usually you look at the lagging sector. So in this case, right, I'll be showing you that the IXI, right, is the industry sector. The industrial select sector index is one of the sectors we're going to look for, long opportunities. And then if you want to look at which are the ones that are weakening, right, we naturally want to look for, those. This is pretty more straightforward, and look at stuff like the weakening sector. So the two main ones, energy and financial sector, right? These two, at least, now it's in the weakening stage. You will not just jump to improving straight away. You need to go to lagging and you go to improving before it become a leading, right? But right now we can see that there are two of them in the weakening sector. Okay. Okay. Now let's go back to our presentation, right? So yeah, I zone in on this three main sectors that we're going to look at. Okay, so we have a very, very, what's the word for it? We have a very, very simple three-step approach. Yeah, we have a very simple three-step approach when it comes to so-called cherry picking, right? Our entries, right? So the first step is find the top 10, right? So there are many ways where you can find the top 10 largest, constituents in each index. So because the reason why I look at it is because size and liquidity are very important, The bigger it is, the more it's traded, naturally, it's just better. Okay. Now, the next thing, the trend is your friend, right? So where possible, we look for strong trends using technical analysis methods. The moving averages, got trend lines, Ichimoku, channels, Fibonacci. I'll be showing you a little bit on that later, right? But you can, and this is what I do encourage too, if you can apply your fundamentals, look at your PE ratios, whether it's undervalued, overvalued, that would also help. Because when it comes to trading, if you think about it, it's all a game of probability. It's really all a game of probability, right? If you use sector rotation, maybe you give yourself just maybe a 30% chance of being profitable, right? And then you zoom into the top 10, you use a little bit of fundamental analysis, right? Maybe you give yourself another 15%, right? After that, you throw in a little bit of fundamentals, you maybe increase your odds to another 15%, right? And then you throw in correlation, you throw in more stuff. It might add on bits and bits and bits, to kind of improve your trading, the probability of you being profitable, right? So in some sense, there's like confluence, of analysis. Right. So okay. The second thing is that trend is your friend, right? And last one is entry opportunities, right? So we kind of look for I'll be showing you some ways where you can look for breakouts, you can look for pullbacks for this kind of trading strategies. Okay. Now, first and foremost, the improving quadrant, which I showed you previously, right? It was the industrial subsector, IXI, right? So we're going to follow the 3-step approach to really finding the best opportunities here. Okay, so just looking at top 10 constituents by index weight, it's very there are many places you can get this, right? Just search the ISCI sector, what are the constituents, you sort based on weight, and you can see which are the biggest ones out there. So what I'm going to do is I'm going to look at Honeywell, right? And I looked at a few, and Honeywell right now is telling me if we look at the RRG, right? We look at the RRG. We're expecting these are more or less, I would say a little bit undervalued. My handwriting's terrible. Yeah, I shall try to reduce my handwriting. Yeah, but this is some of the undervalued ones that you could potentially look to get in to get in on. All right, and we should be expecting it to go from weakening. Now it's crossing into lagging. That's a great position for it to kind of move up towards strengthening. I forgot what is it. Improving and then leading. Okay, so let me just show you, right? So we're looking at Honeywell, right? Usually you can look at the filtering through the top 10. You should naturally be able to find some entries already, right? I'm just going to show you live right now. We're looking at the 1-day time frame for Honeywell. Okay, the ways I do technical analysis. Okay, and this is of course my firm and previously we have advised the trading desk of the largest banks, brokers, and hedge funds in the world, right? So I hope that this approach to technical analysis, it's going to be slightly different, but I can share it to you from an institutional point of view on how we actually combine stuff like RRG with technical analysis. You throw in some fundamental analysis, you throw in some correlation, boom, you have you might not have like the winning trade, but you increase your probability of being profitable. Okay, now I see questions coming through. I can't receive them. Okay, now so what I'm going to do, right? So the first thing when I look at this, right, I do notice that price, price seems to be unable to break up beyond this area, right? A few times is at this area over here. So what we call this, right? What we call this is called a swing high resistance. In trading, there are two things you can do here, right? You can play the reversal, or you can play the breakout. Whether you play the reversal or breakout is a different question, right? And we'll be seeing today on how whether we are going to choose to play the breakout or reversal. But remember, we are expecting IXI, the industrial sector, to strengthen. So ideally, we should be looking for it to rise up. Is it wise to get in right here? No, right? Because at resistance, right? This is what we call an upside confirmation, right? That means price needs to break this level before you can confirm the upside, right? So you don't try to get in now, hoping that price will rise up, because price might go sideways for a while, right? But this is, from a technical point of view, this is obviously the level to be broken, to trigger upside, because price has tried 1 time, 2 times, 3 times, 4 times, 5 times, 4 or 5 times, and it looks like it's right at that level, right? So there is a chance that it might, it might break up in the direction. Okay. So the first and foremost, right, I'm going to do a simple technical analysis, right? I'm just going to draw this thing called a channel, right? So I'm going to fine tune it a bit. And immediately you do notice, right, we do have something of a channel over here. Something of a channel over here. So channels definitely, you know, touch at the bottom, touch at the top, touch a few times at the top, touch at the bottom, right? So why channels tend to be stronger than something like trend lines is very simple, right? It's because channels, you know, this is a trend line. Channels require is like parallel trend lines, right? So, you know, both up and down, right? It is like the laws of technical analysis are being obeyed. So firstly, we can see that there's a ascending bullish channel. So naturally, that means that, you know, we should be expecting prices to rise, right? There is that momentum, okay? Then we throw on the 50 moving average, right? 50 moving average to me is very meh, right? What I do like about the 50 moving average is that, you know, it kind of shows that price was obeying it a couple of times over here, right? But it is important to take note that price is currently above the 50 moving average. What I do like to look at is the 100 moving average, right? So why the 100 moving average is because you will notice that price has been obeying it really, really nicely around this area, right? So you can see it's trying to break below, but because of the, you know, the channel, the moving average, you know, it has continued to hold up very nicely, right? And the last thing I would throw on, right, is this thing called the Ichimoku indicator, right? But I have a different way of using it, right? So most people, when they look at the Ichimoku indicator, right, they have this whole load of mess, right? If you look at it, you're like, what the heck is this? What the heck is this, right? So what I like to do, right? What I like to do is like to click on this, right? And I like to remove all of this, right? I just kind of keep the clouds because the clouds are the most obvious things. The clouds are the most obvious things, right? And as you can see, you know, many times price, you know, unable to break beyond the cloud, you know, when it does break the cloud, it drops strongly. You know, it is not the holy grail indicator, but it's just a confluence of indicators. Means the more reasons you can find momentum, right, the better it's going to perform, right? So now, right here, right, we can see that price is above the 50 moving average, is above the 100 moving average, is in an ascending channel, right? So, you know, you got a 50, you got the 100, you got the ascending channel, you got the Ichimoku cloud. There are four reasons why there's bullish momentum, right? There's one big resistance level over here, right? So personally for me, you know, I'm waiting for price to break this level to trigger the upside, right? And then we can continue playing it upwards. If you want to kind of fine tune your entry, you can do some Fibonacci, right? And okay, I'll probably wait for this level to be broken first, right? I believe a lot of fighting will be happening around this area. Once this level is broken, we can see the push up to maybe the 100%. All this technical analysis stuff, right? Advanced stuff, you know, we leave it for another day. Okay, maybe in the future we can go through such sessions together. All right, so yeah, you know, I'll be looking for a push up at least to the 250 level once the 237 level is broken. Okay, now I'm going to look at we look at strengthening, right? So we're going to look at one quick one, which is weakening, right? So weakening, we got the financial, you know, the financial sector, right? We got a financial sector, and what we're going to look at is we're going to look at Bank of America. Right? I'm going to look at Bank of America. Actually, I went through a couple of them. Bank of America seems to be the nicest one, right? So I'm going to look for the same thing, you know, find the top 10, right? Look for one with a strong trend or a counter trend, right? And then we look for entry opportunities. Okay. Now, you know, keep how it shoots. Hold on a second. I got a. Okay. Now, so Bank of America. Really quickly, I don't want to dive too much into Elliott wave, right? But basically, Bank of America, same thing. What we do notice, remember, here we're looking to short, right? We're looking to short. So we're going to, what I immediately noticed, right, is, I believe there's something along these lines here. Shit, that's a, yeah, this kind of trend line. This kind of trend, ascending channel, right? Kind of catching the wicks at times, sometimes not catching the wicks, right? But if anything, this tells us that there is a break over here, right? I can see that, you know, price actually broke up from here. It made a pullback. It made a pullback to try to reintegrate to a trend line, and now it's dropping down. How far down can we expect it to drop, right? So what I like to do is I like to same thing, you know, I do immediately notice that there is a bearish channel here. So it is really nice when there are channels because channels are like a more complete version of trend lines. Right, you know, because you have people from both sides, you know, the upper and lower limits of the channel obeying it, right? So I'm already looking at, you know, price going further down, throw on the three things again, same thing, moving average, the 100 moving average, right? We got a 50 moving average, and we got the Ichimoku, right? You can see that price has broke the 100 moving average, and very importantly, this little bounce here, it was trying its darnest best to kind of like bounce up, right? But yeah, it bounced up one time, tried again, and now it's finally broken it, right? So we do have, price breaking the 100, the 50 moving, and the Ichimoku. It has broken the ascending channel. Man, that's a lot of them. All right, how far down we can play, right? I like to zoom out on my charts. I like to kind of pick this big level here as the level is being pulled to, right? So right off the bat, right, I'm going to look for price to make a push down to here. Why? I think it also lines up very nicely, yeah, with a 38% like kind of Fibonacci retracement over here. Okay, so you got, this would be the key level that we're looking for price to be attracted to. All right, so you can see that like this is one of the ways that we can combine technical analysis, along with RRG. Okay, and the last one I'm just going to touch on really quickly, right? It's the oops, I closed. Shit. Give me a second. I lost my slides. Okay, I'm going to present from here, from current slide. Yeah. And last one is the IXE subsector, right? Just let me swap it around. The IXE subsector, right? So this is the energy sector that we're going to look at. We're going to try and look at them really, really quickly, right? We're going to look at them really quickly. Same thing, right? You look at this, right? I can see there's already a break of the trend line. A break of the trend line, a break of this big overlap resistance, right? I need to be very wary of time, right? So I got another 4 minutes with you guys, right? So yeah, it's a break of the ascending trend line. There's this pullback resistance. I'm just going to show you how I draw a Fibonacci retracement, and we can see that price is making a pullback to a 38%. Strong descending resistance over there, right? Strong descending resistance, right? So we should be, we should ideally be seeing price make a further push down, a further push down from here. This is kind of really simple form of technical analysis, which I'm showing you, right? But at the core of it, right? At the core of it, which what I want to focus on, right, is that you can see that, right? You can use RRG, right, as a key thing. What I'm showing you over here. Let me find it. Yeah, I can use RRG as like the overarching guide, right? The overarching guide to like, which are the main sectors to look at. Once we find the main sectors, then we go into the subsectors, right? We go into the subsectors and we see that, okay, which ones, right? Which ones are within the main sectors can we look at, right? So in this case, we go into the subsectors, right? So this one, we got the, industrial, financial, energy, okay? And then once we're in the subsectors, we further zone in. We look at a couple of the big players within the subsector, right? And then we apply technical analysis. I encourage you to apply fundamental analysis, right? And from there, you can fine tune your entries, right? So I hope this, if anything, I hope this session really, I hope this session really give you a better understanding of from an institutional point of view, how we do a top-down approach to kind of like a top-down approach to filtering out first the sector, then the subsector, then the specific stock. Then we look at the technicals, then we look at the fundamentals, right? And then we change. This is only a daily time frame. We can zoom in from the daily to the 4-hour time frame even, right? Just to fine-tune your entry, right? So yeah, I guess, right? I guess, let me see some of the questions that come through. I can see some people asking whether it can be used for Forex. I don't recommend it for Forex as much. There is one part actually, right? There is one part, interestingly, right, that you can select G10 currency pairs over here, right? So you can see strengthening and weakening, right? You can see, but they kind of all move together almost. But yeah, you can technically use it for Forex, but it's more traditionally used for stocks, right? I think people, the laws of RRG, right, comparing relative strength, can be actually applied to almost anything. In this case, you can see Forex over here. I think some people are even trying crypto. Some people are even trying crypto, yeah, but of course, they tend to all follow the Bitcoin, this guy running, right? So not exactly going to be super useful there, yeah. Anyway, yeah. Anyway, I'm at the end of my session, right? I'm just going to hand over the time to Ethan.
Desmond, for sharing. I think it's a very interesting approach to see how the sectors rotate, right, with the data points, right? So yeah, I think it's a very insightful talk for audiences to follow, right? Thanks, Desmond, for sharing. So next up, we have another session, which is actually CSOP's Insights in Asia. So I'll see you in the next session, which is going to start at 12 p.m. sharp. Thanks, Desmond, once again for your wonderful presentation. Right?
Ethan for hosting.
Awesome.
Right.
Thank you. All right. See ya.
See you guys. Bye.